This is Matthew Cratter from Bitcoin University, and today I wanted to talk about whether in fact there is a Bitcoin denial of service, a DoS attack happening. We're seeing very, very high transaction fees on the Bitcoin blockchain, and we've been seeing them for the past few days. Here's a tweet from Iris claiming it's a DoS attack, and we're going to talk about this. He claims that the high transaction fees are the chosen pain point by the attacker, probably to make Bitcoin unusable for smaller players. And we can see when he was doing this, making this tweet, the high priority fees were about 201 sats per VByte. Remember that. We're going to see where they are in a moment from now. But it's important to understand how these Bitcoin mining rewards work. Bitcoin miners, if they win the next block, are paid the sum of the block subsidy, which is currently 6.25 Bitcoin. This is what gets halved every 4 years. So next year in April or May or June, somewhere around then, it will be halved to 3.125. But for now, it's 6.25 Bitcoin, newly created Bitcoin per block, plus the transaction fees that the miner includes in that block. Now, when Bitcoin blocks are not full, you can usually pay 1 Satoshi per VByte, which is a measurement of how much block space your transaction is taking up. Very complicated transactions with a lot of inputs will be more expensive than transactions without a lot of inputs or a lot of data. You can send, it's more a question of how much information you're sending. So for example, a $100 transaction could have higher fees theoretically if it had more inputs than a $1 billion transaction. So it's not just a question of the dollar amount or the value that you're sending. When Bitcoin blocks are not full, you can usually pay that minimum of 1 sat per VByte. But when Bitcoin blocks are full, you're going to need to pay a transaction fee that's essentially set by the market, that's set at the intersection of buyers and sellers. This will also depend on how quickly you would like your transaction to be included in a block. Do you want to make it into the next block? In which case that would be a high priority transaction. If you're willing to wait a little bit longer, you will pay lower fees. I took a snapshot last night to show the range of where transaction fees, they were anywhere from 483 sats per VByte for a low priority transaction up to 561 sats per VByte for a high priority transaction. This translated in terms of US dollar fiat to transaction fees per VByte of roughly $19 to $22, which is quite high compared to the last few years. We're going to see how it compares to the last 5 or 10 years though. This morning, we're seeing similar fees, 413 sats per VByte up to 587 sats per VByte for a high priority transaction. And we can see that in the mempool, in other words, in this particular node's waiting room of transactions, there are 441,826 unconfirmed transactions that are sitting there in the mempool waiting for a miner to include them in a block. And so we can see that there's quite a backlog there. And so people are paying up because blocks are essentially full. People are paying higher transaction fees to try to get their transactions done. Now, if we look at this in its historical context, it's not quite as bad as it looks, though fees certainly haven't been this high since really the peak of the bull market back in 2021, when fees got even much higher. They were up to $62 for an average transaction fee. Now, again, averages are going to be skewed by very large numbers and very small numbers. So we're going to also look at median. We can see here, though, that the average fee for the last day or so, last 24 hours or so, is just $19. And again, this is denominated in US dollars, not in Bitcoin. So if we look at this in context, the fees are definitely higher than they have been for a few years. They're not nearly as high as they were briefly in the spring of 2021. We can take a look at median fees. For some reason, the vertical axis here doesn't have real data on it, or the data is too small. We can see here, though, that we're back to 2021 levels in terms of the median fee per transaction. And I guess this is actually denominated in Bitcoin as well, which makes it more complicated. But we can see that the median fees were much higher during the block size wars. These two charts will give you an idea, at least the context for what high fees mean. And they're not off the chart, but they are quite high, especially if you need to transact right now. Dylan Leclerc here in a great tweet pointing out that current miner revenue over the past 24 hours, 23% of it has come from fees rather than from the block reward. Normally this number is more like 1 to 3%. So we're seeing a lot more miner revenue, Bitcoin miner revenue, coming from transaction fees rather than from that 6.25 Bitcoin that they earn per block. And it's very interesting. A lot of people are pointing this out on Twitter, there was actually a block mined over the weekend. This is block 788,695. And what makes this block special is that the total transaction fees exceeded the miner subsidy. So the miner subsidy, again, is 6.25 Bitcoin per block. This block happened to have total fees, if you add up all the individual transaction fees, of 6.701 Bitcoin. So the fees actually exceeded that miner subsidy of 6.25. We can see we're talking about real money as well for mining these blocks. This miner earned, this was mined by Foundry in the US, they earned almost 13 Bitcoin, so approximately $374,000 for one 10-minute block. If you're enjoying this video so far, I just ask you to hit that like and subscribe button, especially subscribe to the channel if you haven't already. It really helps out the channel's reach with the algorithm. Now, here's the problem with talking about very high or low fees. And this is what a lot of people sound like to me when they're discussing this. Hi, I'm some random guy on the internet, and I just happen to know the precise optimal level for Bitcoin transaction fees. And I also know it much better than the free market. The Bitcoin transaction fee market is a free market that's set, again, by supply and demand, like all free markets. And so we hear people saying Bitcoin transaction fees are too low for the network to survive. That's what we've been hearing for the past year or so. And then over the weekend, we're hearing now Bitcoin transaction fees are too high for the network to survive. So which one is it? And if you know, who are you to be able to officially pronounce that fees are currently too high or too low? Are you a Bitcoiner who doesn't believe in free markets? Do you believe that we should have a centralized authority setting fees instead? This would obviously give way too much power to that centralized authority. It's important to remember Bitcoin transaction fees are dynamic, free market, set at the intersection of buyers and sellers, set at the intersection of supply and demand. I'll link in the description notes below to this May 1st video that I did where I was talking about the critique that Bitcoin transaction fee revenue will not be enough to compensate miners after we get a few more halvings. So this was trying to argue that fees would tick up and would not be too low. Today I'm having to argue the opposite, saying that Bitcoin fees are not too high. Instead, though, what we should do is we should accept the verdict of the free market, especially over short periods of time, and not panic because fees are too high or too low. Transaction fees are actually a nice built-in way of preventing spam. You can quote-unquote spam the Bitcoin blockchain, and one person's spam might be another person's transaction. But doing this, if you're going to spam the Bitcoin blockchain, in other words, if you're going to make a transaction, you need to pay transaction fees to do this, to be able to do this. So this is a very nice built-in spam filter. It's not like sending millions of spam emails or tweets or YouTube comments where the marginal cost of sending a spam unit is basically zero. And when there's a lot of transaction volume on the Bitcoin blockchain, we can see that fees can move up quite a bit. Here's an important question. Who gets to decide what Bitcoin transaction fees, what Bitcoin transactions are spam, and which are not? This is just like Bitcoin transaction fees. We probably don't want to elect a centralized authority to decide for us these things. Again, I'm not a fan of tokens on Bitcoin like the BRC20 meme coins. These things are a complete waste of time. I'm not a fan of ordinals or inscriptions. I've compared them to graffiti on the Bitcoin blockchain, but I don't know how to stop them from using the Bitcoin network. And I'm also not worried about these things because I'm quite skeptical that they can outcompete the monetary uses of Bitcoin over the long term. Over the short term, over a weekend, they can certainly overwhelm the blockchain and draw a lot of attention. But I don't think this is something that can be sustained. Here's a tweet from Andrew saying that the majority of transactions are currently just spamming the block space. They're all a certain V byte size, and they're all transacting precisely many zeros, 546 Bitcoin. So these are very small transactions. You can see here how uniform they look. And he drills in and has downloaded the Unisat wallet, is looking at the various ordinals and inscriptions on here, and thinks he's found a connection. For example, here's 0.0000546 Bitcoin, and it's a picture of a marshmallow or something like this. And so I tried to do this last night, and I did. I picked this block 788,716. You can do this just by going to mempool.space. I scrolled down and I looked, and there were quite a few transactions that were transacting with that 546 Bitcoin number. And so there is a good chance that this was coming from this particular wallet. I was scared to download this Chrome extension. It's not something I really want to mess around with, but you're certainly welcome to do it. And you might be able to see what these small transactions are. Are they NFTs? Are they these inscriptions running on Bitcoin, or are they BRC20 tokens? It ultimately doesn't matter. When I hear that this is an attack on Bitcoin, all I hear is, hey, we're paying Bitcoin miners many extra millions of dollars every day. Take that, Bitcoin. I don't think this is something that's going to hurt Bitcoin in the long term, and it actually does help the miners at a time in history when miners have been struggling, certainly over the past 12 months. So it's nice to see them making some money. It has caused problems with various exchanges and their withdrawals. Binance, which still hasn't set up the Lightning Network, was having trouble meeting withdrawals because of the high fees. Now they've basically adjusted their transaction fees so they can get transactions through, and they now say that they're finally going to integrate the Lightning Network after listing all these terrible altcoins. Finally, they're getting their priorities straight. But it does look like Binance was able to meet withdrawals, and I expect all these exchanges. Coinbase, I think, still needs to add the Lightning Network as well. So how do you transact? How do you handle a high transaction fee environment like we're currently in? First thing you can do, if you need to transact, you just pay that $19 and you will get included in the next block. Again, fees may vary. I'm using this average fee number right here, talking about paying $19 for an important transaction that you want settled with final settlement security. It's not the worst thing in the world. People will say, oh, $19, it's so expensive. It costs $35 roughly, somewhere between $30 and $45 to wire, to do a bank wire, a Fed wire in the US. So you have to put this into context. You only use bank wires for very important things. And if you need to do a very important transaction on Bitcoin, you will be willing to pay the $19. Again, if your transaction size is below $19, then you will not be able to do it, obviously. But moving $19 is probably not the most important thing in the world. It doesn't require the Bitcoin network. The other thing you can do if you're making a small purchase is you can use the Lightning Network, which still has very low fees, to pay for that cup of coffee or whatever e-commerce purchase you're making. Fees are still very low in the Lightning Network. The other thing you can do is just don't transact right now unless you have to. It's just like travel, for example. If flights are too expensive, if hotels are too expensive, fewer people will go, there'll be less demand, and then prices will slowly move back down. This is how supply and demand works, and we should let markets work. What we don't want is a lot of interference in markets by centralized authorities like the U.S. Treasury or the Fed or the U.S. government in its other incarnations. So don't transact right now unless you have to. Hodlers usually don't need to transact unless, for example, they're doing a withdrawal from an exchange. If you believe that Bitcoin transaction fees, these current fees, are unsustainable, you don't have anything to worry about, because if they're unsustainable, they probably will not be sustained. Still, there will be people who are tired of Bitcoin's price volatility. They're tired of the volatile transaction fee market. So I should let these people know that there is another solution that we could come up with. We could appoint a council of men and women. We try to choose mostly lawyers and investment bankers who know about these things. We'll have this council hold monthly meetings and basically take care of everything for us. They can set the price of money. They could set the price of. They could set interest rates. They could also set the quantity of money. In other words, the money supply, how much money needs to be printed relative to the size of the current economy. We could just call them a centralized monetary authority, or we could just call them a central bank for short. The problem with this, of course, is central banks destroy currencies that aren't backed by scarcity like Bitcoin. Also lose value over time, because if you have people who can print it, they will print it. So this is the problem with central banks. We don't live in a perfect world. You have to ask yourself, do I just want the current system with all of its problems, all of its wealth inequality, all of its unfairness, all of its censorship, all of its bleeding out of energy? We can see here all this economic energy disappearing over 100 years. You can either have that system, or you can have Bitcoin, and you can accept Bitcoin's price volatility and transaction fee volatility. We don't live in a perfect world of rainbows and unicorns. It's important to also take a step back and realize that being able to transact on the Bitcoin network will become one of the most important activities on Earth. Probably won't be cheap. And so you're going to have to go use PayPal or Venmo or Zelle. If you don't care about decentralization, neutrality of money, censorship, resistance, and owning a money that is a true long-term store of value. Again, there's also the Lightning Network, which will have lower fees as well. But if you want to transact on the base layer, you will have to expect to pay a significant amount, I imagine, over time. The other thing, though, that high transaction fees do is they do spur on innovation, and they create incentives for people to figure out how to use block space more efficiently, including batching transactions. This is something I don't think Binance was really doing enough of until this weekend. And so it is good to have a free market where there is some pain, and so when there are high transaction fees, people change their behavior. But I trust the free market to sort this one out. I don't think this is a DoS attack. And the thing about DoS attacks is they're very difficult to sustain, and they can be very expensive as well. And in the process, if you're a government launching a DoS attack on the Bitcoin network, what you're basically doing is enriching Bitcoin miners, which is not the best long-term way of destroying the network, by making the actual miners on the network extremely wealthy with your transaction fees. So this is something we'll be keeping an eye on. Maybe there's something I'm missing, but this market has been around for a while. We now have the context for what high transaction fees really look like. So we'll be monitoring this, but it's not something that I'm worried about at the moment. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.